let's touch base with Rashesh Shah, Chairman and CEO of Edelweiss Group, to understand a bit more about how business is shaping up right now. Rashesh, it's great to have you on the show. Thanks very much for taking out the time. Now, you've recently quite successfully closed your QIP. What kind of oversubscription did you see? And which are some of the marquee investors who have participated in this issuance?
Yeah, actually, this was a very important event for us because, as you know, we have been growing at more than 35% in profit after tax for the last 5 or 6 years. And as a result of that, to maintain this growth, we needed to raise capital. Also, it was an important event because we raised equity capital in Edelweiss Financial for the first time after the IPO. So after 10 years, we raised equity for the first time, and our idea was to raise the capital but also get some marquee investors, and we are very happy that we have investors like CDPQ, Kotak Mutual Fund, HDFC Mutual Fund, a lot of existing investors like Goldman Sachs, Amansa, Steadview. They all came in and participated. So good endorsement from existing investors, but also a lot of the new large marquee investors coming in, which gives us a lot of confidence and support for our growth going forward.
Right, Rashesh, hi, morning. So what kind of capital dilution have you seen from the QIP, and how is it that you see the post-issuance ROE and ROAs? And also, how much of this 1,500 crore capital are you planning to infuse into each of the segments of ARCs, life insurance, NBFC, as well as capital markets business?
Yeah, we have actually, we did the QIP at about 280 rupees, which is broadly around the market price. The SEBI formula price was 285. So we did it around the market price, and as a result of that, the dilution has been under 7% of the company. As you know, our current market cap is around between 24 to 25,000 crores. So at that market cap, we raised about 1,500 odd crores. And have diluted just under 7% of the company. As a result of that, obviously, our equity base goes up, our book value will go up, and along with that, for a couple of quarters, maybe there'll be a small dip in ROE that always happens when you raise equity until your growth momentum catches up. But we already at a 22-23% ex-insurance ROE. And we have always guided investors that we want to be between 20 and 25%. So I'm sure we should be remaining in that because we're seeing good growth momentum on all businesses, both on the credit side, especially retail credit, and on the advisory side on wealth management and asset management. So currently the growth momentum is fairly good across various segments in financial services. So using this equity, we should be able to maintain growth, hopefully, and catch up on ROE again in the next couple of quarters.
So what are the growth plans for these businesses over the next 1 or 2 years, and how do you see each segment will contribute to the PAT?
So currently one of the important growth segments we are in is retail credit, where we do home loans and SME loans. We are seeing a lot of growth traction in SME loans because we think SME have been starved of credit. Also, SMEs have gone through, demonetization, GST, but the stronger ones have come back becoming even more strong. So there is a large pool of SMEs that can access credit, can maintain the growth. And now that all this, GST and all has got absorbed, SME credit is a big growth area, and using technology, using analytics, using all available information about the borrowers, we can underwrite better, turn around much better, but also invest a lot in customer experience, because even SMEs should get the same customer experience that large corporates get. Historically, SMEs were never able to get the experience of being a large borrower, but I think that is now accessible. So our focus is on that. We are also focusing on growing our ARC. As you know, we are the largest ARC in the country, and distressed asset still has another 5 to 6 years of restructuring, resolution, revival, with additional capital to be put. The structures, more newer structures are emerging for those also. So there is a lot of interesting opportunity. And as you know, we have a partnership with a Canadian pension fund, CDPQ, along with our capital, their capital, and some other third-party money we have. we have close to between 12 to 13,000 crores of cash that can be invested for the distressed credit opportunity. So that is another great growth opportunity ahead of us. And the third one is the wealth management segment, because with entire financialization of savings, household savings are still very robust, and a lot of that household savings is starting to move away from real assets to financial assets. But even within financial assets, from only bank deposits to equities, bonds, mutual funds, insurance, and AIFs and various other products, and that gives a lot of opportunity in the wealth management space. So these are currently the three big growth vectors for us. Of course, obviously, other businesses like asset management, capital markets, all of them are also growing fairly well.
Right. Rashesh, your 3-year vision envisages a consolidated return on equities of 18% and life insurance break even by 2022. What is the strategy to achieve this vision? And you've also talked of a ramp up in the retail book to 50% of the total book that you have right now.
See, currently our retail credit is about 35-36% of our total book. But in the last year, the retail credit has been growing at 40% per annum. And if we keep on extrapolating that, we are very confident that by 2020, retail credit should be more than 50% of the total credit book. And that will be very good because it will give us a lot more growth opportunity, will bring a lot more stability, because as you know, retail is much more scalable than corporate credit is in India. And retail is growing faster because only in the last 10 years have we seen the growth of home loans and SME loans and all, and now that is starting to pick up very well in the economy as a whole. And actually that's very good for the economy because this will drive a lot of growth and job creation in the economy. We also, our insurance business is now 5 years old, which is a partnership with a Japanese company called Tokyo Marine. That is now about 5 years old, and we are as per plan in the last 5 years. And insurance business is starting to also become interesting because growth is coming back, the regulatory environment has stabilized, and with this entire, again, demonetization and financialization of savings, insurance is becoming a good vehicle for long-term investments. And we think we'll break even in 21-22, which is standard because insurance takes about 8 years to break even. 8 to 10 years has been the average break-even period for all insurance companies. So we are as per plan, and we see a lot of growth prospects over the next, not just 5 years, but 10 and 20 years in the insurance business, because this is the vehicle by which long-term household savings will get channelized into long-term investments.
Right. Rashesh, RBI has relaxed some norms of the Sarfazi Act for ARCs, which augurs well for your company being the largest in the industry. What kind of growth plans do you envisage for this segment, and how much will it contribute to total PAT of the consolidated entity, which is some of the latest deals Edel ARC is exploring? We would like to know that as well.
Yeah, I think the new RBI guideline on allowing ARCs to own more than 26% is very good. We've been asking for that for a long time. The good thing has been that whatever have been the ARC industry's demand, which have been reasonable over the last 3-4 years, RBI and the government have been very amenable to that. Like, last year they increased ARC holding for the sponsor, which was earlier capped at 49, which can now go up to 100%. So even that has been good news. Now this recent that ARCs, when they convert a stressed loan into equity, can own more than 26% is also very good, because now ARCs can control those companies via the equity structure, the stress assets that they have. Overall, our ARC has been averaging 20 to 22% ROE, and we think because ARC is a specialized form of an NBFC, and as a specialized form of NBFC, our ARC is geared about 4:1, and on that basis making a 20-25% ROE is very healthy. It's I think structurally good, and we also have our equity base in the ARC is now almost 1,000 crores, which makes us one of the largest ARCs from an equity capital point of view. We are the biggest ARC from an AUM point of view also. So I think with 1,000 crores equity, we make about 20-25% ROE on that. That should be a good structure, and we hope to maintain that for the next few years.
Rashesh, moving on to the markets with the recent Moody's upgrade, how do you see FI reacting to that, and do you think emerging market flows will come back?
Yeah, I think, we got the ease of doing business improvement. A lot of that was partly expected, but came as a very good endorsement for the government policies. And I think a lot of us do believe that the target of being under 50 is achievable over the next couple of years. So I think ease of doing business was the first strong endorsement. But the bigger one, and it was a surprise for most people in the government, most people in the business, for the investors, was the upgrade from Moody's. I think that was a very strong positive surprise for all of us. And in a way, it does endorse it, because last 3 years, I think a lot of improvement in business climate has happened in India. A lot of these improvements are structured also. They will take time to show up in actual growth and profits and all of that. But I think GST, the opening up of FDI, the insolvency bankruptcy code, the real estate bill, all these are very, very big steps from a structural point of view, and will transform some of the very important activities. Like IBC will change the way corporate structure themselves, how they borrow, how they behave, all of that. The real estate bill, because almost everybody in India wants to buy a house, and housing is the biggest asset for, home is the biggest asset for most households. And having a strong regulation on that is very positive. It's going to have, huge benefits for India as a whole over the years. Opening up of FDI, we are now one of the most open countries in the world for foreign investments, and we are open for business. Obviously, GST, everybody knows, is a market development. So all these things in 3 years, inflation is under control. RBI has shifted to inflation targeting. All these are very, very positive moves. So we have made in the last 3.5 years many structural moves, which are now being recognized and appreciated, and the Moody's upgrade was a reflection of that.
Right. Rashesh, two mega triggers for the market in the next 6 months. One is, of course, the upcoming Gujarat elections, and then Budget 2018. How do you see the market's reaction panning out in the run-up to these two events?
Yeah, I think Gujarat election is going to be important, but given the strong position of BJP and all, most of the experts believe that they will win. And I think it's an event that the market is just waiting for it to get out of the way. It will be a good thing, and as the analysis comes out, you will get more nuances on color on how the people are thinking, what the government will get a lot of inputs out of not just the result of the election, but the process of the election. And obviously, as you correctly said, 2018 budget is an important one. It's going to be the main budget before the election comes a year after that. And I think the most important thing people are going to watch for that is on the fiscal consolidation path, because last a couple of years we have seen government has been very careful, very conscious of maintaining the fiscal discipline, and I think that has been one big instrumental fact in bringing inflation down in India. That government has been very, very cautious, very conservative, very careful in making sure that they don't slip on the fiscal discipline, and I think that is one of the more unspoken achievements of this government.
Okay, Rashesh, great speaking with you. The fundraising activity, and once you do manage to deploy those funds, and we'll chat again soon.